Good evening, guys. Hope you're doing okay. We've had a big change around the last 48 hours. Sunday night, we were euphoric. Complacency yesterday and fear tonight. We haven't been this low on the technical scores since we've looked at the technical scores. So we are quite bearish today. So normally we'd hover around 10% or something. There would be one thing that was just like a little bit out of bonk, but everything is indicating risk off, and that's using this analysis here. So everything is lining up, okay, for sell. But there's one thing, obviously, is that the big picture is that we're still seeing a load of bears in the equation, and because of that, we can't expect like a big crash, because if we did, those guys would get paid. And so what we've seen a big change on the 24 hours, and that's impacted the big picture. If they're carrying at this rate, it's going to take like 10 days to get to risk off. But at the big picture, I did say a couple of weeks ago it will happen, the following week. But we can't anticipate what the herd are going to do. When a news event comes out, like on Friday, about the Blinken and Xi meeting, the president of China, and that was actually legit. It might have been actually legit fear, and because of that, they did actually sell, and we went euphoric, and we did pump on the risk appetite. But it's possible that it leaves like a residue, because obviously the big fish are going to be concerned about US and China and any tensions. So obviously it does have ramifications. So even though the herd had sold, they got punished, but they might have been right, because it could be legit. And it was really interesting today because Yellen spoke, and normally what happened whenever she speaks, we'll see the VIX and it gets crushed and then it goes into negative, and then that news bite will get regurgitated and retweeted, and everyone reads it, and the algos kick into gear, and the VIX gets really crushed. VIX comes down, indices go higher. That's how it works. But today, it didn't happen, and that for me is like a bit of a warning sign, because it's basically, I'm not saying rigged, but it's orchestrated. So whenever she speaks, it gives like a sense of security and stability in the markets, and then that's what the algos, it's learned to detect, that whenever she speaks, in whatever context or whatever sentence that she uses, as long as she says something, the algo believes that it's going to be risk on, and so the VIX will dump. It's just that it correlates whenever she speaks, and the VIX decline. Okay, but today it didn't happen, and that's really, really unusual. I'd say it had about 95% correlation normally, and today was that very strange anomaly on that 5% where she spoke and yet it didn't cross the VIX. So something's going on, something that they didn't like. Obviously we had that bad data today, and we had the GDP miss, and we've probably got a hawkish Powell tomorrow, to be fair, because he needs the inflation down. Otherwise it's going to look really bad for him and his colleagues. So I think we're probably going to see a stronger dollar tomorrow. If we look at the bubble, we can have a look. It may have shifted. Right, so the dollar is over here, so it's a strong buy. However, the euro is there as well. So from a Dixie perspective, which is the euro weighted dollar index, it's going to be very, very tricky and very hard to guess what's going to happen with the Dixie. However, we had a good... someone asked me in Telegram about dollar CAD. That went fine, because I was saying how the dollar would be stronger than the CAD, because we're looking at its location and where it is on the bulk chart, and it was certainly in a stronger location than CAD, and we've actually performed really well on dollar CAD, which we could see on our spreadsheet here. So come to dollar CAD. We've got so much on here now, it's a bit bonkers. And also, you guys need to let me know if you're having performance issues or lag with the sheet. Okay, it might be opening fine. If it is, that's okay. If it's taking ages to load, you've got to let me know. So that's obviously the dollar CAD idea that got sort of spun around a little bit in Telegram. I was away in Cambridge today, so I couldn't do any charting, But if you are away and you want to look for trade ideas, you just have to, well, use your sheet. You know, you come up here. If there's loads of greens, it's pretty much going to be a buy. And if you want extra confirmation, you know, you come to the particular currency that you're interested in. If you want extra confirmation, just come to the bubbles, and the daily bubbles is fine. It depends if you're sort of scalping or not. If you're sort of swing trading, the weekly bubbles are probably better. But the daily bubbles, you just say, right, well, I know the dollar's strong because it's in here, and I can see the CAD is weaker of the two, so the dollar should be stronger than the CAD. And that's how you can make some good profits. And obviously, Kiwi dollar would have been good as well. So I can't guarantee this is going to be the case, but we'll have a look. So we know that the New Zealand dollar is weak, the dollar is strong, the USD. So come down to NU, and we should be negative. yeah. Okay, so that's a really good demonstration how to use your sheet in order to get a bias and how to make profit, because that's what we're here for. We're here to make profits, right? So that's how to use the sheet, and you know how to get a bias as well. And also they have gone really long. Don't ask me why, they just have. Okay, so that's the sheet taken care of, and how to make profits using the sheet. And remember, we got a deal as well. We have a deal for returning customers. So if you're interested in coming back, then we can certainly get you on a potentially a cheaper tariff, a cheaper plan if you're interested. And if you're new, then we can probably do you a deal as well, because I'd like to get you guys into the sheet, and we can certainly look at getting you in and getting involved. I need to fix this chart here. That is a common thing across all. I mean, I suppose I could delete it. I suppose it's not really a big problem. It had some nice graphic there, but it's not working. So that's the sheet taken care of. So we can come to the indices. We had a -1R on the robot today, so we had another loss, but it says a 10 pip loss. So it's not really too bad. It's just we haven't got the ideal conditions for the EURUSD currently because we're very range bound. I can just show you it on the hourly chart. Is fine, because what's happening is that we're sort of caught between that low and that high, and we just really have fluctuated since you know, all week. And you could probably argue from the 26th, you know, so since Friday we have pretty much been range bound. It looks like we might be breaking that low. If so, good, because then we can have some good price action. If we're caught within a swing high and a low, we're just going to chop, and no one really wants to be doing that ranging conditions as well. And so the robot's just encountering small losses as we go. Once we get a breakout, the technicals will come in and go, right, we're a sell now. Then all we need then is the trigger from the Twitter API. So we do need to see a break of the range, higher or lower, it doesn't matter, but we don't want to be contained within this high and low there. And we have chopping a lot as well. So there's the buy, right? So you can see how they started to sell it, and then there's your long at 106.44. Would have encountered a bit of drawdown. It's about a 25 pip drawdown, yeah, 30 pip or so, but then you're looking for decent, nice risk to reward there. So that's how you can use it. We also had one here, crossover, but they have started to sell it. Look at price action, sold it heavily, bomb. They went long slightly, ever so slightly getting paid, but then they sold. And we had this move. This was a US data move. Likely CPI or PPI. 25th. CPI. That's a CPI move. This is horrendous, isn't it? So yeah, that kind of stuff's going to get you in trouble. It's a huge move, and it was kind of unknown what was going to happen, really, to be honest, unless you had like prior knowledge about that data, which we don't have. So that would have probably done a lot of destruction. I mean, we recouped all that loss. We did a 180 degree, which is absolutely crazy, isn't it, really? And now because of that, we just chop him. So that's the euro, and that's why the bot's just encountering small losses. We just need to see a breakout, okay? S&P. And see, what's going on here is that they're going long. So they started to go long. we can draw a box. Now I just said in Discord, what's happened, I think, is that they encountered so much loss from selling, they've blown up and they've refunded their accounts, and then they think, well, I got completely blown up by selling. What if I change my bias? What if I decide to go long? I'll be careful, but what will happen is that they won't be careful, right? And as the case, they'll think, oh, I don't really want a small loss. It will come up. It will come up. And this is what could be happening. They're thinking, well, I'm not going to get out here because it's going to come up. I'll hold long. It will be fine. Maybe it'll be fine. Maybe it won't. But if they all do that, it's going to be quite bad. Okay. So let's draw a box up here, and there. So we have an overlapping of the box, yeah-ish, isn't it? So we have an overlap. So that's a little bit ominous because it tells us that they're trying to buy. Then buying is going to create a supply because there has to be some to take. If the retail guys buy, there has to be an entity who sells. Okay, and it's a good opportunity to perhaps offload because the banks have made a humongous amount of profit. Who to sell to? You know, the retail guys, the commercials. And we can see this on the sheet. Come to the S&P. We've got so much data on here now, but it's cool though. This COT data is so useful. See, we've had a reduction of open interest on the S&P 500. Why? Because they've taken profit, because we've got end of month, right? So it's a good heads up. Okay, so if they're gonna take profit and offload, who's good to offload to? It's these guys. All right. So that's that. So they could well look to buy. They could be looking to hold long. If they do, they're going to wake up tomorrow morning with a bit of a sore head. And the thing is, Powell can reverse it. We may see a risk reversal for Powell tomorrow, so it could pan out for them, but it is risky. Okay, US 30. Oh, are we US 30? It's pretty much we're having an overlap, and so here's one, and then we create another one. So we basically got an overlap. All right, so it's just telling us that they're trying to buy, and that's not necessarily a good sign for price. It's a good for if you're bearish, but it's not really a good sign if things going to go higher. But you could argue we really have pumped, and we probably could do with like a breather. And likewise, the Bitcoin is up 100% in a year, so a 20% retracement off the high is quite normal, really, because that's still a fantastic return. So these things could just be a little breather, and then it will just be by the dip. And then before I wrap up the video, I'm going to remind you guys about the game plan that we're going to do in the QDB service. Okay, I'll just try and remember to say about that. And gold, like you can do DAX, I guess. And then we create an M. So saying up here, you know, we create a resistance that started to go long here. Right, so we created a resistance. What happened? We hit it again, and what's happened? We've got an M, and so we can create a box here. And I'll talk about the game plan, and then we'll just wrap up the video. So that's quite a big punishment box. So when we, if they continue to hold, and then we go into positive territory, that will then mean that we'll probably do like a correction. And what we'll do on our risk calc is that we'll wait for that to go into positive. Okay, so you know we'll have like a proper rinse out, almost like a flood, if you think about it, like a biblical flood where it just washes and we start afresh. Okay, so when we go into positive, we'll have like a flood, and then once they start selling again, that's when we're going to enter long. And then the thing is that they'll hold short because the price action will be so heavy and so scary that they'll think, well, I have to sell it. And then they'll hold on. So that's what we'll do. And that's the game plan. Okay, so get involved with us when we do that, because it's going to be absolutely insane the profit we'll get. And I'll give you guys stop loss levels as well. And I think probably just do S&P, to be honest, because it's a good instrument to use. It's not too crazy. The Dow Jones can be very volatile, and like the DAX as well. So I think we'll probably look to go long on the S&P, but we'll need to have a correction and then a flood, and then we can start anew, and then that's the game plan. Okay, so it's really important that you understand we've got a long-term goal. Okay, we've got like a play that we're going to use, and it may take a little while before that happens, but when it does, I'll let you guys know. Risk disclaimer for anything that you do in the financial world is that you will need to use very strict risk management. So if you don't have the risk management in play, you're pretty much gambling. Okay, and we really want to be looking at trading, and we want to be looking at risk to rewards, and in order to get a good reward, you need to define your risk. And if you don't know where your stops are, if you haven't defined your risk, then you could end up losing all your capital. Okay, so you need to know where your exit is, and then by knowing that, then you can forecast your profit. But if you're entering willy-nilly based on some information that you found on the internet, and you've entered without knowing where your stop is, you're going to encounter huge losses. So just to say is that it carries a huge level of risk, and it may not be suitable for all investors, and past performance is not indicative of future results. Okay, so it's a quick disclaimer there.